If it was 1975 and 1995, it would be all good. Except this is a new century. That old school travel stuff is no longer on the table. You don't get to go, oh, we're going to build some Disneyland amusement park, Universal Studios stuff. No, no. And we're going to only be on an island that never works, by the way. I just got to tell everybody how it is. That never works. Good try, but that never works. That's why amusement parks are usually in connected cities where people can drive, connected countries so people can drive. Soon as you start telling people to get on a plane and then have to pay for where they stay, how they get around in transportation, how they're going to eat, drink, and be merry, that money is being spent. So telling somebody it's going to cost you $500 for a family of four to get into a park for one day, that does not usually work. Okay, now that we got that out of the way, it was a good idea. But then if you're going to do that, you got to bring something to the island that is special. You don't bring something to the island that an all-inclusive resort has, like a water park. Seriously? That's what all-inclusives have. Oh, you're going to bring some sort of jungle gym thing? That's what all-inclusives have. What do you... That was insane. They bring some 1995 video game nonsense, laser screens that's been out for the last 30 years ago, old technology, thinking that was cool. You guys know what I'm talking about, that amusement park that didn't even last a year in a stupid location. Okay, fine. They tried it. It had written all over it, failure, because one thing and one thing only, $100 per person to come in this outdated amusement situation from the 1990s. Who thought that was a good idea? Everybody was thinking, oh, roller coasters. Oh, bumper cars. Oh, cool stuff. No, not even. And charging 100 per person, a 149. Give me a break. Even Disney costs less. This was crazy work. They got a lot of money from somebody, though, but it failed less than a year. All right, now let's get into it. I had to talk some smack because who didn't see this coming? Because we didn't see it coming. We thought they were bringing some 2020 technology. We didn't know they're going to be like 1990 stuff, acting like you're going to roam through and see some stuff on a video screen and some lights and shoot at them like it's 1985. I was like, what are they doing over here? Okay. Anyhow, don't try it. That's never a good thing. There's no big time amusement parks on any island, period. Unless you can get to that island from a major city. That's it. Like a Coney Island, for instance, just to give you an idea. All right. Like the Eye of Dubai Island, because it's in Dubai. You get it? That's it. You ain't going to put any amusement parks in the middle of the Caribbean on an island. Okay, you better come with something like Atlantis. That's what you better come with. All right, anything short of that, forget about it. Don't even waste the hundreds of millions of dollars. And those were Disney's guys that did that. Okay, enough. I've been talking too much smack already. Let's get into it. All right, we got to find out about this Spain situation. Let us know also about the Spain. What did you pay for? How much did it cost? Post-retirement travel, Mr. Worldwide 2. He backed up the truck on Tuesday, taking advantage of the rise in the stock market over the last few days, and continues to take advantage because he backed up the truck 2 years ago. He backed up the truck 3 years ago. He backed up the truck when it was the pandemic. My, ladies and gentlemen, talking about 5X, 10X, 12X, 20X your money just from the pandemic. Just saying. Very smart man's in the house. Another investor bought real estate outside of the United States as well. Welcome to the SSN Nation Financial Friday Night Live Stream. And he brings his tagline this evening. Make sure you have your pen, pads, and paper because hello, all. Let's do this. And that's what he exactly means is let's do this. We try to help you out, ladies and gentlemen. That liquidity problem, we're going to get to that as well because those private credit firms that's filing bankruptcy, that means, guess what? You know what happens when you file bankruptcy? They don't have to pay their debt. The debt is owed to somebody. That means they're not getting paid. There's a domino effect. Now they have to scramble for the money that they're not going to get paid to make up for who they owe. You guys getting it yet? The derivative game? This is the tip of the iceberg. Better get yourself a little bit of gold, a little bit of silver, a little bit of crypto, a little bit of platinum, a little bit of palladium, whatever the case may be, a little bit of copper. Either way, make sure you get it, ladies and gentlemen. All right, now let's get into this. The numbers game. Let's go. Let's go. Let's go. Let's go. Let's go. All right. First things first. Remember when I was telling you guys before we needed about 14 million by 2012, right? I mean, sorry, 2012. It was like 2025. We needed 9.5 to 10 million. We only got 8.8 million tourists by air. Then we needed 2026. We needed 10.5 to 11 million. All right. 2027, we need 11.5 to 12 million. Here's the news. I said it on Wednesday. In 2023, we had 8.2, I believe, million. 2024, we had 8.5 million. 2026, we had 8.8 million. You guys can see it's 300,000 more people every year. If this trend continues, you can see we are going to be way behind the number. That's the first thing. All right. Hold on. I got to do something else before we get into this too heavily. Okay. Look at this right here. I have this all on the screen. All right. I have it all on the screen just so you guys can see. Here's your numbers. Write this down, ladies and gentlemen. That's right. You're going to get a test at the end. Only playing. Here you go. 51,400 active short-term rental listings across the Dominican Republic. That is according to Price Labs. All right. So again, this is another place that they tell you the occupancy rates and how many short-term rentals and all this stuff in certain markets. Listen to this. These rentals have an average daily rate of around 112, but notice this, 31% occupancy rate. So you remember when I said you should have 9.5 to 10 million. They are over 700,000 short of the minimal amount up to 1.1 million, which now means that is 90,000 guests per month short. Now, you may not think that's a lot, but it is. Because if you had those 90,000, see those 51,000 active number here? That is how many per week you need to cover. And those 90,000, which could have dropped down to 45,000 because we're talking about two people a party, we would get closer to covering this every week for short-term rentals. But hold on, some people stay at hotels. So now you understand why you need things to rise every year, because we have new units coming on the market as we speak in 2026. A simple 5,000 more units means 5,000 units are on the market for rent, whether it's a hotel or whether it's a short-term rental. The number's higher, but I'm going to use 5,000 for the ease. That means every week is 5,000 new available units. That means you need 10,000 people. If two comes in a party, which again, I'm going to explain, it's not two, it's more than two. I've been using two, but tonight we're about to get in deeper. All right. So just keep this in mind. I've been keeping the 2. All right. It's higher than that, like I said, but here's the kicker. So if you need 10,000 new tourists to arrive, and then you divide it by 2, so that's how we get to 5,000, but the number really is 10,000 per week. So that's 40,000 a month. But it's very simple. If you have 52 weeks in a year times 10,000, that's 520,000 people that has to come. So do you understand, if you go from 8.8 and only add 300 to 400,000, you have a net negative because you needed to add 500,000. So now we have a negative 100,000. So occupancy rate is going to go down. We have more units, but we don't have more tourists. Are you guys understanding this? Okay, let's go. All right, I'm glad to see they're getting back connected. Hey, Victor, how you doing? He says we're great. All right, guys are doing great too, getting ready to get back on the road in the next few weeks to become Mr. Worldwide too. Once again, we're heading to DR and Puerto Rico, then to Southeast Asia. Did you guys buy in Spain? Yes, they did. I'm waiting to hear about this. Was it Alicante? I think it was. So back to the basic business at hand, ladies and gentlemen. So do you understand now where I'm going? I hope you understand. This is what you should be thinking about. All right, let's get into it a little bit more, shall we? Because now that you know there's 51,400 short-term rentals on the island, don't you need to know how many hotel rooms there are as of September 2025 on the island? It's reported 92,142. So now you have a whole number of hotel units and Airbnbs on the island. So when you go 92,140, I guess we can go correct, right? 92,142 plus 51,400. We can go by those numbers. That's 143,000 units. 542 on the whole island, all of Dominican Republic. You guys hear this? 143,000? Do you understand what this means? A lot of people misdiagnose what this means. What this means is, once you understand that the DR, when somebody comes for vacation, the average stay is 7.5 days. So I round down to 7. So now you have 143,000 units available every week. It's not every month, it's every week. So now you understand 143,542 units combined with short-term rentals and hotels times 52 weeks. That is 7,464,184 rooms available. But you want to know what the problem is? That's not a static number. How many more hotel units and short-term rentals are going to be added this year? Well, we don't need to go any further, but we do know they're going to be a few thousand, right? So whether it's $5,000, whether it's $8,000, whether it's $10,000, you can understand that it's still $10,000 or $5,000, but you know that there has to be 520,000 more people if you go by the $10,000 number, right? Just saying. So again, in order to keep up with the correct and a higher occupancy rate, we don't have more customers coming. We have more rooms than we do customers. That means by adding more units, occupancy rates go down. And that's why occupancy rate in the DR for the island on average is 31%. You're not going to be making money at 31% if you're buying at today's prices. Because I'm going to tell you right now, you're not going to be able to charge somebody 1.5 times whatever you purchased it for unless you're in one hell of a spot. And again, 31% occupancy on average, you can't write that home is going to be very, very successful. All right. Even if you reduce your rate, guess what happens? Nothing, because you're going to get less. You're not going to get that much higher occupancy, but also everybody else has to lower their rates. So you're not going to be like, oh, well, everybody's charging $300 a night, I'm going to charge $150. Sorry, not how it's going to work. All right, let's get into it further. Okay, let's see where I'm at right now, because I don't want you guys to get lost, but you guys hopefully can understand what I'm saying, because this is major for investors. Now that we got this established, that we need now listen, we have 143,000 rooms times 52 is 7.4 million rooms available per year, plus we're probably going to add another 20, I'll just say 10,000, but it doesn't matter. 7.4 million. You guys with me? Okay, I'm glad you're with me on the hotel numbers. Okay, we're not going to get to occupancy numbers, because here's what we're going to right now. Here's what we're going to, the real numbers. That's where we're going. Don't let these David Collado gaslight you, because they include stopover visitors by air, which is 8.8 million, and there's plus. Visitors by sea, 2.7 million. So they report tourist numbers as 11,635,151. All right? That's what they go by. Unfortunately, the visitors by sea, they're not staying overnight. So they can't count for us for hotel rooms nor short-term rentals. So we're now down to 8.8 million visitors. Does anybody see a problem with this yet? You have 143,000 units available every week. All right? Does anybody want to know what 8.8, I'm just going to round down, 8.8 million divided by 52? That's 169,000, ladies and gentlemen, and 230. All right? So some of you right now are going, oh, Eric, I'm so ecstatic. You said 143,000. Oh, my. I did say that, didn't I? Did I not? You can already see we have 143,000 units, and the homeboys who are all giddy, trying to always be positive, they're going to go, hey, see, look, we have 169,000 tourists per week. There's only 143,000 units. This is a positive. Hold on, young man. Hold on. That's not how the calculation works. So the question you need to ask yourself is, how many people come in a party? Because not everybody comes by themselves. Right? Right. Okay. So now we don't know how many people. I've been using 2. Very simple, right? So now that 169,000, guess what it really is, ladies and gentlemen? When you divide the 169,000 by 2, guess what? 84,000 potential customers. Potential. Because not all air passengers are staying at a hotel or short-term rental. But you can already see 143,000 minus 84,000. You can already see how many units are still available per week. And I don't know the number, but I'm going to have to go with, what is that? That's like 85? 85,000 units short. Are you getting the message yet? So if we're 85,000 units short, now you understand how the whole island could have an average of 31% occupancy rate, right? You can also understand how you're not going to be able to all of a sudden go, hey, you know what? I want to charge a higher price. Sorry, there's so many units available. So you can't, you need higher occupancy. So just by that criteria right here, you could easily see why it matters where you purchase. Because if you did not listen and you decided to go rogue and said, oh, I'm just going to buy a condo because, it's over here in the middle of nowhere. All it has is a pool and a fitness center. I'm going to be good. It's downtown. Great. But guess what's going to happen? The people that actually have real amenities are going to be able to charge or get the same price as you. So by you reducing your rate because occupancy is low, they're going to reduce their rate. But people are going to go, well, why am I going to stay over here when I can stay over here for the same price or an extra 50 or $100 or $200 for the week? I'd rather stay over here with the amenities because I don't have to spend anything for those amenities because I just don't have a pool and a fitness room. So you understand what we talked about before. But now I hope all of the naysayers, all of the homeboys going, oh, don't talk bad. I'm not talking bad. I'm giving you the numbers. This is the real deal. You don't get the BS people. You don't get the gaslight people and go, oh, yeah, hotel occupancy is 93% every year. Or they don't get to gaslight you and go, when we rent the units for you because you bought a condo hotel or because we said you could do Airbnbs, but after we built the place, we changed our mind and we're going to manage it. We're going to make sure that everything is fine and everything's kept up so we can take 50% of your money, which now means you're going to be in a very, very bad situation. So now you understand all those things that you thought were good and everybody's railing that I used to say, no, it's not good. Now you're about to F around and find out because when you got that condo hotel and when these assholes changed their program after saying you can have an Airbnb here, and all of a sudden, oh no, you can only go through management through us. We're not going to allow you guys because we want to make sure everybody's being charged the same amount. Guess what? If you have low occupancy rates, I think a whole bunch of people that you're managing their property, they're going to be very, very upset for them to be getting 30, 40, 50% below what you told them they were going to get. And they're going to be awfully unhappy. So that is what's coming down the pike as more and more deliveries happen. So you guys have to understand how this works. This is not child's play, but I'm giving you guys the numbers. So you can already see where we're going. All right, here we go. Yes, we bought a place just back a couple of weeks. We're going back to Spain in May. All right, I'm going to keep a bridge of this because in case we have somebody that has some awesome Maria, so happy for you guys. Exactly. We also want to buy, but we're very concerned about the residency Spanish income tax. They tag you for worldwide income like the USA. Yeah, but usually when we have EU countries, they actually offset it. So wherever you pay the residency tax, it's offset in the other country, just like DR. So if you pay it in DR, then it's a write-off. You don't have to pay it to the US, and vice versa. If you pay to the US, then you don't have to pay your the tax in the DR. You have to submit your tax forms. The same thing's going to happen to Spain because they're in the EU. They're friends of the United States, and Spain is DR. So I'm pretty sure it's going to be the same thing. So you really don't have to worry about that. You don't pay twice. Just saying. They have a treaty and agreement. So check it out. All right. Another one of those reasons why we talked about DR. We are only staying there 3 months at a time. So you're not considered a tax resident. That too. You usually have to stay somewhere past 180 days in the US. I don't know about Spain. So that's another thing as well. So she's already hit on one other part of that equation. Tamara Larry, welcome to the SSN Nation Financial Friday Night Live Stream. Very happy to see you in the house. Another investor is here. And she brings her usual tagline. Very simple, very short. Hello, all. I'm very happy once again to see you. And that's her tagline, ladies and gentlemen. Really. But even with property on your name, the Spanish government doesn't consider you a resident. My wife's Spanish passport is being worked now. Well, if you're going to have a Spanish passport, then you're probably going to have residency. But once again, you guys are married. You guys are going to have to figure out how you're going to write this off. But either way, it's going to be written off. So since you're the U.S. citizen and she's the Spanish citizen, take your pick. Either you're going to still report the same as far as I'm concerned. Whatever you have there, either you're going to say I'm a Spanish resident and pay it. And then when you send your taxes over there, you're going to go, hey, we paid it over in Spain. And or vice versa. Either way, I don't see how that's going to be a problem. Let's see. Yep, she's saying the usual 180 days. You have to stay there for 6 months to be a resident. Exactly. Yep. That's what I figured. It's the normal situation. Okay, I see we got some guys in the house trying to, bust up the party. It's all right, though. I don't really mind this. We always have these guys doing something crazy out here. Okay, here we go, ladies and gentlemen. Hopefully you guys understand how we're underwater so far. So we got 84,000 units. 84,000 people possibly per week. Possibly. Because again, we don't know how many people's actually staying anywhere, right? Couples. We're talking about couples. All right, here we go. Eric, Air France returns with direct flights from your homeland of Paris to Punta Cana. Also, the Punta Cana Carnival is coming up 20 February. Yes. That, I don't know if that actually gets extra tourists. Again, it's weird because it's a thing that's only on the island because in America, it's already happened, right? In New Orleans, they already had their Mardi Gras. So it's very interesting. And I don't really know if people are, saying, circling their calendar going, okay, but I do know this, it's President's Weekend. So people are circling their calendar for it anyhow. But again, we're going to find out real quick here the effects of what's been happening in America and Canada over the last year. How many people are actually going to go when the numbers come out in February? For January 2026, we're going to find out. Because remember last year, it was barely over 800 and some odd thousand. So I believe it's going to be around the same number because we have more people that have less income because prices have risen. So I don't see how you're going to have the same people coming back again. There's going to be some sort of, there has to be more people from some other source. And then when you clear an airspace such as South America, Venezuela, and people are scared to fly, all of a sudden you're cutting off some of the South America that you had gains in. So you want to play siding with the USA, fine. But if you're talking about tourism, they could be hurting you in more than one way. Because anybody landing in the United States is now going to have to pay fees. So if your airplane if you have to change planes in the United States, you are subject to being returned to your country if they don't like what you're saying about the US, because they're checking your social media and or just the way you look. So there's going to be people that's not coming that would have been coming. And that's another thing that can't go without saying. All right. Anyhow, we're down to 84,000. But get this, ladies and gentlemen, I'm about to do something else to you because here we know some more information. You know what that information is? You're not going to like this. I'm going to show you guys something right now. Look at this. There is, let me get this up on the screen. Down here, I can't actually highlight it. Down here under key demographics of non-resident stopover visitors, guess what? 0 to 12 years old, 869,000. Okay. So remember the two adult thing? We got down to 84,000. Guess what? 0 to 12, you know what that means? That means they're kids. They can't check in any hotels at all. So now 869,000 out of that 84,000 or 84, what was that? 84,000. Yeah. 84,000 has to come out of that pile. Right? And I'm off because that's 84,000 units. But We had seven. What did we have? 8.8 million. We had 8.8 million, right? So now we have to take off 869,000 people. Guess what? It was 8 million. What was the number? 8,860,000. It's pretty close, 869,000. So guess what? We're actually down to 8 million, ladies and gentlemen, not 8.8, because 8.8 million, they all cannot rent. And now we take off 869, but I got other bad news for you. Look here, 13 to 20 years old, 691,000. Okay, some people are going to say, yes, you can be 18 to check in hotels. So therefore, 13 to 17, how many people would that be out of the 691,000? You know what I did? I said, you know what? Why don't we just take 131,000, round up to make it 1 million? And we'll just say 18 to 20 was roughly around 550,000. I think that would be more than fair. In fact, I think that's going to be way more than the number, but let's just say 18 to 20, those people could check in a hotel. So we're only going to take off 1 million. So that 8.8 number is not 8.8, ladies and gentlemen. It's 7.8. All right. Now are you starting to see a problem? So now you take 7.8 and divide that by 2, we're down to 3.95. Okay? Are you guys understanding the situation? So when people are sitting there saying, don't worry, everything's fine, we have all-time record high in tourist numbers. Yes, you do. But we needed 9.5 to 10 million. And this year we need 10.5 to 11 by air. If we don't get that, which we won't, then that means we're going to be a net. My prediction, they're going to get 9.2, 9.3 M this year. Best case scenario. That means we are going to be 1.3 to 1.8 million short of where we need to be if hotels are going to end up with an 85% occupancy rate, which will then raise your short-term rental rate. Now, what I'm giving you guys is exactly what would happen on any island. But you want to know what else? What's even better? Right here, they have a number for how many hotel rooms were used. It was used by 5.844 million people. That's how many people, when they signed their e-ticket, said they're staying in a hotel. You can easily see that would be a problem too when you start dividing and saying 2.5 people. And that's why this is what happened this year. 75% occupancy rate, down 1.4%. This is going to continue to happen. It's going to keep dropping because they're going to add another 6,000 to 8,000 units this year. But you're not going to be able to get another 6,000 to 8,000 visitors. And some of these visitors are going to go short-term rental. So this I expect to drop, as it should, right? So this is not a great rate. If you want your short-term rental to make money, you cannot have your hotels doing an average for the year of 75%. This is not a good sign, except it's a good sign for everybody that bought cheap. Because due to inflation, the price of rentals are going to go up. If anybody disagrees, let me know. We can talk. Let me know what you guys think. Do you think I'm going down the wrong path at all? I don't think so, but I know I'm not. But the fact of the matter is, maybe somebody says I missed something. So now you can understand these numbers are going to get lower for the hotels. If you think it's 31% occupancy this year for short-term rentals, what's going to happen when you add 5,000 to 6,000 short-term rentals and you're only adding 300,000 new tourists coming to the island, split in half? And actually, it's more than a half. 150,000 divided by 52 weeks, that's less than 30,000 a week. And then you split that in half, it's 15,000. We're already short 15, more than 15,000. So by adding another 6,000 units, occupancy rate drops automatically, right? So the numbers are in stone. Congratulations to everybody that bought between 2018 and 2023. Again, that will matter. And the other part, it's oh so sweet. Because again, now that people had theirs delayed, you want yours delayed even longer. You don't want delivery in 2025. You don't want delivery in 2026, really. You want delivery in like 2028, 2027. That's what you want. All right. You want it way out because you want the price to go up. So that gives you options because they can't build it for the same price they could build it for now or in 2024, 2025. Now, all of a sudden, they have to charge more if they want to buy or build new construction. And so, therefore, prices should go up, even though not sustainable for short term rentals. But the fact of the matter is, there's going to come a level where all of a sudden you hit a ceiling. And now people are going to go, I want to sell my thing. I don't even care if it's for a loss, which is what's happening at River Island right now. People are like, damn, I had to pay 80%. It's not going to be delivered. I want to sell mine right now before in-house for a loss because they already know the writing on the wall. They're sitting there and go, man, I had to give you guys 80% because it's a no-vol property. That parking lot view studio for $160,000, they know they cannot charge $160 per night in their management program because how much of that are they going to get when they're in the rental pool? 50%, $80 a night. And you're going to have 40%, 45%, 50% best case rental. That's not going to bode well, ladies and gentlemen. And just think, a one bedroom at what was it, 179 at first for that parking lot view, and then after that you're in the 200,000s and up. That is not going to be good. They already figured it out because they know Noval has other properties that they're doing condo hotels and short-term rentals for these other owners, and they already know they're only charging, like Reserva Real is charging $84 a night for a one bedroom, and for a what is it? Is it a one bedroom or studio? No, it's a one bedroom, $84 per night, and a two bedroom, $94 per night, knowing full well nobody bought a two bedroom or a one bedroom at Reserva Real for $94,000 or $84,000 for a one bedroom. And even if you did, it's a condo hotel, so you're getting roughly 50%, 45% to 50% of that price, 40 some dollars a night. I don't care if you have a 90% or 70% occupancy rate. That's not going to bode well for profit pictures. And after all that, you're going to get 2 or 3%. Come on, ladies and gentlemen, that's not going to work. All right. So this is why I'm against condo hotels, just so you guys know. All right, let's go. Anybody have anything else to say right now? Okay. I want to hear if anybody has anything to say, all you Dominican Republic investors. Oh, and all you developers and all you guys saying, he doesn't know what he's talking about. He's lying. Right. What are you guys telling the people that are that you're managing their properties now when they're dealing with the low rental rates? Oh, by the way, Joe Nay, thank you so much, man. If anybody's interested in Jardines, get this. Jardines in pre-construction, they've reduced their prices $2,000 to $5,000. That's right. Are you getting the cracks? Are you getting the signs? If you're interested in Jardines, it's in Pueblo, Bávaro. They're doing gentrification over there. It used to be a low income neighborhood, still probably is half of it. It would be high risk, high rewards potentially, under 100 grand, but they reduced their pre-construction project numbers 2 grand to 5 grand. Can you believe this? This is not a one-time discount like they normally do. You know, they're not like, oh, it's this day, it's one day, or it's this weekend. No, they reduced it 2 grand to 5 grand across the board all year long. As far as that goes, there's no time frame, and you know why. I've just explained why. Not enough people going equals not enough potential buyers either. Think about it, but don't think too long. It's happening quietly. And oh, by the way, you guys can go to Facebook. You guys can get into the real estate, any real estate brokers or real estate people. You can go over there and find some places. And then all of a sudden you'll start seeing things like, here's a villa in a certain section of DR. I don't really pay attention to that, but it'll be something like, well, here's a 3-bedroom, 2.5-bath villa, and it's near the beach, less than 100 yards away. And then they say, well, we only want $150,000. It's like, what the heck? Yeah, it's happening as expected, because when you are doing this, we got all these tourism numbers, people start believing it. And then the next thing you know, when you don't really perform like you did between 2018 and 2023, and then you rely on the cruise numbers to help bolster it, when in fact cruise has nothing to do with it, people still believe, oh man, it went up. Man, it went up it went from 10 million to 11 million. And it was only 9 million 2 years ago. All these people are coming there. We need to go over there and invest. Well, that's why they use that number instead of the real number for air passengers. Again, misdirection. So all I wanted to do was, who's ever going to invest in the Dominican Republic, guess what? I put in the chat room, tourism analytics. You can go further and deeper into this. And then somebody said, they go, because I was talking with Mo, he goes, hey man, I don't really care about all that numbers. He says, I want to know how many people are in Dominican Republic. I mean, in Punta Cana area. I said, well, I didn't figure that out because it's not really relevant. But if you want to know exactly how many people would be potential renters for the DR in Punta Cana region, now you're going to have to figure out, what are you calling Punta Cana? Are you calling the whole province La Altagracia, which includes Cap Cana, which includes Macau, which goes out to Higay? I mean, it even includes Baia. Or are we talking, you're going to have to figure out what range you're talking about. I do the whole thing. So I said, well, then that's pretty simple. Once you know how many passengers by air is the real number, then all you have to do is put in the number that they say. So here's the stopover visitors, right? Here's the tourist numbers. It's right here. You got 3,265,000. But now you have to do the same thing. You go divide that by 2 and then take off of half 2.5. So now you're down to 1.6, and then you got to take off whatever the 17, it's really 17% for the 0 to 13, right? 0 to 17 is like 17%. So then you take off 17%, another 350,000, or it's 400 G's or whatever. So now all of a sudden you go, wow, that's only 1.5 people. But that's the air passengers. But then you go, hold on. Let's go look at something else while I'm thinking about it. We're going to go down. Wait, let me see if I can find it. Or was that it? Where's the? Here we go. Here's Punta Cana. 61% of the share. All right. Of all passengers on the island. So now you start using this number, but then you have to figure out what part of Punta Cana you're going to include. Are you going to include all of La Altagracia, which has 6,000 short-term rentals, and they have roughly 30,000 hotel units. That's right, ladies and gentlemen. I know, it's crazy, right? So now you can start doing your numbers for Punta Cana. Now that's not going to give you your areas, whether it's in Cap Cana, whether it's in Vista Cana, whether it's downtown, or whether it's in Los Corrales, El Cordacito. But if you guys really want to know something, I'm going to give you guys some interesting news, because remember when Los Corrales, El Cordacito was one bedrooms. I mean, no, sorry, studios were 60. No, sorry. Hold on. Studio units were 71,000. I mean, 71%. And the one bedrooms were 69% occupancy rate in 2024. All right. So that on average is roughly around 70, right? Okay. Guess what the new numbers say? It's not separated like that from the one source. The separation will probably come next month when they figure out the real numbers on another site, which is Airbnb Ticks. So anyhow, I used a different site, but 59% Los Corrales, El Cordacito occupancy rate in 2025. Down 10 percentage points. So now, do you guys still think that what I'm saying is not appropriate? All the numbers don't lie. And so when I said years ago, I wonder why I was predicting then, everybody said I had 9.5 to 10 million should have been this year. So now you understand that 9.2 short, they should have, well, I use 9.5 to 10 because it needs to be in a range, because I can't pinpoint it. I can't say it's going to be 9.7, but I know it needs to be up there. If they would have had an additional 600,000, right, passengers that came, that would matter, because 61% of those passengers, they land at Punta Cana Airport. That would have been an additional 300 and some odd thousand people. 180,000 people divided by 2 to go stay somewhere potentially in that area. So that's why it matters. And next year, they needed to be at 10.5 to 11, which they're obviously going to be short. So now all of the occupancy numbers should act accordingly. Hotels should go down a little. Occupancy rates in Punta Cana should go down a little, and around the island. This isn't rocket science. The numbers don't lie. It's very simple. Some people are like, it ain't that simple. But all right, let me know. Here we are. Okay, I think a 50% occupancy is doable for me, since I don't plan to have a mortgage. Key is to keep costs down. Like, don't add jacuzzis. Exactly. They are money suckers. Exactly. And I think jacuzzis too. Because my thing is, if you have an occupancy rate of 50%, that means 15 nights during the month. That's your average. And people use your jacuzzi with their suntan oils, with their lotions, whatever, with just their skin coming off and all that stuff. What's going to happen when you start thinking about it? You're going to have to waste money changing it, because you can only charge so much. So if you say, okay, well, the guy wants $50 every time, so twice a month, you're going to pay $100, let's say, if that was it, and the chemicals, then all of a sudden, that's $1,100 a year coming out of your pocket or more. Because again, if it sits for 2 weeks, you got to run the electricity, because it has to have filter systems, right? So you can't just let your water just sit. It'll create algae, especially in a hot, humid environment. So you have to have somebody come over and put something in the water. So again, it's not just going to be a simple, these guys finished. Where are you going to flush? You're going to drain? What are you going to do? So again, that's why we don't recommend jacuzzis or pacuzzis. If somebody wants to go and jump in something, they can go down to the pool, use theirs. All right. I already pay HOA for that. Just saying. By the way, the HOAs in a lot of places, they are not $2. They're not $1.50. They're not $2.50. In a lot of places, they're $3 or more per square meter. So that's another thing. Your expenses are going to be higher than what was portrayed when you were originally getting pre-construction projects. All right. Insurance rises, inflation rises. We knew it's going to naturally happen anyhow. And so you're going to have to pay a little bit more. All right. Okay. Let's go. But the 50% occupancy would be doable if, and if I know how much you purchased. I don't know if you can get your 0.1% at 50% occupancy out at Counter Rock. I haven't looked, but that's going to be a tall order because more units are coming online in Counter Rock, which is another thing. Again, we're having an increase in numbers for short-term rentals and hotels, but we're having not much of an increase to cover that increase from tourism. I want to know, does anybody have any recommendations on how they're going to get that? Eric, you mentioned 10% return the other day. Is that netting 10% of the total rent per month? I don't think that's reasonable in DR unless you lower the nightly rate significantly. Oh, it's doable. The same rules apply. If you did 0.1% of what you purchased for and you did 50%, you would be doing 10% plus. Your management, though, can't be condo hotel, and your management can't be charging you 30%. You can even get away with it at 20 to 25%. But again, it's going to be very tight because the problem is, I don't, being able to charge 0.1 for you may be doable. But for the people that are buying the new unit that costs 400 G's, 400 a night, you're right. They won't be able to do it because those are the people that bought in 2024, 2025. They won't be able to do it. They're out of luck. A 210 per night, that is doable in Counter Rock, Hard Rock, but not. I don't think 410, unless I even if you had Ocean View, I'm like I don't. How are you going to spend 410 when all throughout that area they have 2-bedroom units and people are charging 120 a night, 130 a night? I mean, I don't see how you can get away with 400 other than to say it's up here in the front and we have a restaurant or something. And even then, I don't see why somebody would pay $300 per night extra for that. So, and then you start interfering with the situation at Hard Rock itself, because then it turns into people start calculating, going, well, I can just buy a day pass for 3 of us and get all the water park and all this other stuff and the beach and everything, the drinks, the eats, the beach, for at least 6 hours a day for the afternoon pass or something, or the morning. I mean, so then it starts being the numbers, when I don't like being in the numbers game, because once people start calculating, am I going to pay 450 a night for this place, or pay 200 a night for another place, or 150 for another place? All of a sudden they start calculating, wait a minute, I could spend 300 and spend 450, and we have all our eats and everything for the 6 hours and all the tourist attractions inside the place. So all of a sudden that changes the whole ball game. And whoever wants to compete with all inclusives, I wouldn't. I don't want. I want to be where people look at me and they say, well, he's giving me this. And that's why I always said amenities, because if somebody said, well, We have all this extra, like in Vistacana, like in Atlanta, is going to do, like if Larimar, Cruise on Land, built their amenities, they had an advantage because that mentality changes. They go, oh, I got all this stuff and they're only charging me $150 a night. That's how you want it. You go, we have all this stuff and they charge us 150. We don't have all this stuff over here, but they're going to charge me 450. That's where the problem comes in. So again, that's why the numbers matter. Let's see. I am already at 10% return of investment with Galaxy based on current value and how much I paid. Oh, you meant the 10% return on the appraised value. Oh no, people are going everybody who bought between 2018 and 2023, you're going to have well more than 10%. Well more. There is no two bedrooms are over 200 grand. You have two bedrooms inside Vistacana, penthouse units that are 250, 275, 250 to 300 grand. Remember, garden, panorama garden, two bedroom, 2.5 bath penthouse was 123. So 249 to 300, great. 200, great. Yeah, well more than 10%. It's going to be something. It's all going to be 50%, I believe, at least. Even if we're talking about today, for all those people who aren't going to have deliveries for until 2027 or 2028, it's going to increase because just like anything with new construction, the cost to build is going to be more per square foot. It's going to be a perceived value, but the problem is going to be the people who bought early, you'll always be able to get a profit. The people who bought later, there's no guarantee that you're going to get your price because no rental wise, you can't get your value. And you can't sell some, just like, let me give you guys something that happened. There's you guys know Mike Masters, Property by Masters. He had a video recently where there's $136,000 one bedroom condo for sale inside Vistacana at Panorama Lake, which actually Panorama Lake's kind of cool because it actually has its own lake, pool. It looks kind of nice. But nonetheless, they already have a renter, a long-term renter that pays $1,000 per month. Now, for him, the person that bought it, because we don't know what he bought it for. It could have been, if he would have been like the first week or something, he could have bought it for 69. If he was later on, then he bought it for 79. If he bought it like 2020, late 2020, early 2021, then it was 99. And then it was sold out. So we don't know what he bought it for, but it doesn't matter. He's selling it for 136. So he has a profit built in of 40 grand or 30 grand. We don't know, right? If somebody bought it for 136. But here's the question. Who's going to buy it for 136 with $1,200 annually from long-term renter? Is that a good deal? Now, that's less than 10% straight out the box. The only thing is, I don't like long-term renters myself, but somebody might. So if you like long-term renters, okay, you guys, so be it. But again, for me, it's generally headaches. I don't, there's going to be some issues that comes up because you have people living there. So whether it's a door that's warped, whether it's locks that don't work, whether it's the AC unit goes out due to it needs to be recharged, or whether it's some plumbing issue, there's a myriad of things that can occur. And that means that's the expense coming out. Now, the HOA is $150 a month. The square meters is 51 square meters. Remember, I told you it's closer to $3. So he's paying $1,800 just in HOAs a year. So he's down from 12 to 10,200. We haven't even gotten to if there's insurance, which I didn't even bother. But if you got into insurance, now you're paying an insurance. If you are dealing with some amenities, which they are, the internet is included. How much is the internet? I don't know. But it could be $25 a month for all I know. But again, so we round down to $10,000. So now you have to say, okay, just on the bare minimum, nothing goes wrong. We're at 10,000 is how much we have earned for the year. And we divide that by 136,000. And that gives you a number. That number is 7.3%. You guys, like I've always said, some people will live with that. But notice he's selling the property, even though he's earning 7.3%, even though he's going to double his money in about 10 years at this rate. But again, there's other factors because he's going to raise the rent. It'll be 1,020 next year or something, let's say. Um, but that's where this goes. So if you're good with spending 136,000 and then saying I'm good with 7.3%, then I guess for you it would be somewhat of a good deal. To others who are investors in other like stocks, they would say, well, I can just get a stock that earns 9% dividends for the last 20 years. I feel good with that. So I'll invest in that. And so I'll get over, instead of 10,000, I'll get closer to 12 to 13,000 a year, and without having the headache in case something goes wrong, if the person loses their job and can't pay and we have to evict and whatever all that goes through again, or the person decides to move out and now I have to find a new tenant, but it takes me a little while. Again, I'd have to pay for the HOAs, no income coming in. There's all kind of different things. But to me, when I start looking at something and I see it's under 10, I get turned off. I'm like, then there's no point. There's no point. There's no reason. And you're the one risking if there's a storm that comes, if there's something that happens, if there's an earthquake, if there's water that leaks somewhere or plumbing goes. I mean, there's a myriad of things. And over a year, something's going to happen. Let's just call it what it is. Okay, let's go. Agree. For nightly rate, I am shooting for somewhere around 125. We'll do higher for concerts and high season, spring break, 3 months, summer, Christmas. Well, okay, post-retirement travel, but I got to be honest, we got to say it like it is. If you How are you going to be good with 125? Cuz we know, well, I might as well just tell everybody you're at 210 I think or something. Somewhere in that ballpark. So that means you would be below, or are you talking about after, either way, are you talking about after management fees? You're good with 125 because you're going to be well below the number. And in order to get your number, like I want everybody to get 10%, right? So let's just do 22,000. All right. So if we have management at 20%, that's 17,600. Oh wait, that's, yeah, 20%. That'd be 17.6. This ain't going to cut it already. So therefore, I need income annually of, what are we talking? 30,000 times 80. Yeah, I need 30,000. All right. So we can go backtrack it. And if I need 30,000, I divide that by 12. I need $2,500. All right. Per month, free and clear. But the problem is, I'm going to have roughly, I think you're probably going to have what, a $350 HOA, right? So now I got to add that to the 30 grand. So now that's going to be, let's just say 4 grand. So now I have to make 34,000. Okay. Okay, so now we're at 34,000. Now I'm just going to add another 1,000 because I'm going to need some upkeep when people check out, even though they're going to be charged the housekeeping. But again, I'm going to have other things such as I'm going to have my internet's running. I'm going to have electricity on, I think, some form of you're not going to cut off your Wi-Fi. So, or, anything else. You're not going to cut off electricity, I don't think. So, or well, even though in the DR you actually could. You don't have to pay your bill because you just do on demand. So actually you could do that. But anyhow, you're going to still have some expenses of some sort. So now I got to go up to 30, let's call it 30, 34. I'll just say 35,000 just to be fair. Just that best case scenario. So now I need to make 35,000 just to get myself at 10%. So then if I say, okay, I'm going to divide this by 125, that's 280 nights. All right. And if we do this, that's 76% occupancy. I don't think anybody at Connor Rock's getting 76% occupancy. That's 76.7. That's what you would need. And so somebody would say, well, hold on, Eric. Uh, uh, Golf. What would you prefer, a golf and pool view or street Hard Rock lobby view with ocean view, but far in the distance? We have a choice. We plan to see in person. We're in a pickle trying to decide. I don't know if it matters. And the funny part is the reason why I don't know if it matters is because there's first of all, there's not that many people that go to an island to play golf. That's the first thing. Even if people do come to the island to play golf, they have so many different courses to choose from. So there's no reason for them to pay extra for golf view. And there's barely any reason to pay extra for ocean view when you don't really have clear ocean view and you're not at the ocean. Other than it's always cool to have ocean view. So here's what happens when people rent. The first question for an island is there ocean view? So if you ask me what I would take, it's ocean view. I don't care how far away it is. Because people ask, is there ocean view? You say yes. And people will pay a little bit extra because you have ocean view. Yes, people will pay a little bit extra for golf view, but I rank ocean view. Ocean view is number one. Nobody asks you, is there a golf course view? Let's just get, I've never had that happen. Nobody cares about golf course view. I have had people ask me, is there a golf course there? But never anybody going, yeah, I want my unit to be on the golf course. That ain't even, a, that's not really a thing until it is a thing, right? So when you're advertising your unit, you would say, I have golf course view to try and attract, to justify why I'm going to have a, instead of looking at another building. So that gives you a little higher price. You can charge a little more. Just like pool view, you can charge a little more because there are things when families come and they say, well, I need pool view because my kids are like 13 to 15, 16 years old. And I just want to be able to look down from the patio or the unit and make sure they're okay. That is a thing. People do, that's what they look for. And sometimes they'll forego the ocean view and say, that's what I want. I need pool view because I want to watch my kids because I don't want to be down there in that sun all the time. And I just want to be able to just check on them and make sure everything's all right. That is a thing. So that's something to consider. But number one is ocean view. And when you can put that in your listings, if you're doing your private listings and you can put ocean view, it's number one. And you get to charge a little more. So that 125 price, you might as well say that. And you getting 280 room nights is highly unusual. Highly unusual. If you pick, first of all, you're at Connor Rock where they're building more units. The Riviera, uh, what is it called? Riviera something is coming online, I think this year. So that's going to add like another what is it, 150, 160 units. Then you got more you got other stuff that's not built by Rock coming online. Also, the other one, is it Universe? There's another one that's coming online. So you're going to have about another 200 hotel units plus that other company that's building out there too. So you might have like 300 units coming out this year. So, but here's what the thing is, ladies and gentlemen. I don't have to guess. You don't have to guess. So if you're an investor and you own at Rock or anywhere on the island, just go to Air ROI. Okay? I'm going to do this right now. I'm going, oh, I can do it on here. Hold on a second. I'll do it on my computer because it might be better. I've been using my phone for it, so I just got used to it. But here's Air ROI, just so you guys can check this out. All right. Look at this. Okay. Um, what will you prefer? A golf? Oh, yeah, it's ocean view, man. I don't the lobby's fine because you're gonna clear it. Even if it's, well, the distance is basically that half a mile from the lobby to the freaking beach, it seems like, but still, it might be a quarter mile, but it's still a ways. But that's just it. It still has ocean view. That's number one. You always pick ocean view units if they're giving you a choice and you don't have to pay for an upgrade. It's ocean view all the way. There's not even a forget there, hands down. It always works best. Ocean view units on short term rental properties, if your price isn't outrageous, you'll always rent for more. But 125 is a bit low because you need 280 nights. So, anyhow, let me get over to, let's go to La Altagracia. In fact, hold on, let me do it this way. I'm going to put it on screen so everybody can just see it. It's nothing special. I'm not doing anything. Looking at it from renter's point of view, good point. Thank you. Yeah, that it's always everybody. Do not, if you are forced with this same choice, golf view, pool view, partial ocean view, uh, scenic view, never, hands down, ocean views number one. That's again, I'm going to say this. This is the number one question for anybody that goes to an island. That's their first, even though they don't even really want to stay. They go, hey, do you have any ocean view unit? And I say, yeah, okay. You want to stay at the ocean? Fine. You want to stay at the ocean view in Maui? Fine. Um, it's going to be at the west end. It'll be on the north or the south, but the one bedroom unit is going to cost you like 800 a night. They're like, what? I said, yeah, but you see, the resort charges like 1,200 a night. So I I I I'm charging you $400 less. It's a deal. I'll give you 700 a night. They're just like, what? I said, okay, okay, hold on. You can stay at Kanapali Beach Club for about 350 a night. How's that sound? Then I say, well, you know what? Why stay at the, why, you can go to the beach. You can walk to the beach. You can just stay at the Halua Resort and it's only 250 a night. They're like, what? What did you say? Yeah, you can just, and you have full kitchen. You got everything. You just don't have the ocean view. They're like, wait, I can stay the whole week for 1,800? Yeah. Then they go, okay, I'll take the 250. So that's how this whole progression goes. But they understand it's going to cost them more to stay. Now, if I would have said it's 250 to stay at the beach, then they would have said, okay, because it's the same as the other one. But that's the progressions. So if you get phone calls, which you don't anymore, I used to get phone calls. And so that's the progression. So I would get more people to rent at the other units where I make even more money. And instead of that, because then I would start telling them, oh, it's got a mini mart, it's got a a tiki bar. It's got a, all this stuff, pool table, game room, fitness room, which the beach spots usually don't. So all that stuff, they're like, oh yeah, I'm here with my family. That would be awesome. So now they have more value. But the ocean view is always the one people call for. So you always want to have the ocean view unit. And if you price it accordingly, you're going to be good. All right, look at this. Look at this right here. Here we go, ladies and gentlemen. Let's get to the other part. We're going to go to air ROI. So we don't even have to guess. We're going to find out the occupancy rate over there. Let's go look. Let's go look it up. All right, Punta Cana. Here it is. All of La Altagracia. That's the whole province, which is like a county. All right. And that county is huge. Goes up to Macau. Now, see, look at this. In this province, 38% occupancy, ladies and gentlemen, in the province. So it doesn't matter where it is. This is just in the whole area. It's 38% average. So you know what that means. It's an average. So that means if you have someone doing 68%, that means you have somebody else doing 8% occupancy for the year. That's how you get to that average. Now, you see these little red marks on the screen. Let me bust this up a little bit. Let's open this up. This is their map. So we're going to go up to Cana Rock, Macau-esque area. I believe this is Cana Rock because it has to be. There's only one place that's going to have this massive amount of units in it. All right, here we go. Now, I don't know which unit may have ocean view. This one could. So let's just look. It's up front. We don't know which one it is, but we'll find out. I got to see the phone. I can tap on it a little better. This one, hold on. Let me get this a little bigger. All right. This is it, ladies and gentlemen. Let's see if we can get this. Here we go. Aqua Pearl. Okay. This is an Aqua Pearl. Pool view. 17.5% occupancy. All right. 2-bedroom, 2-bath. You guys can see this, I hope. Let me go look. All right. You guys see it. No confusion. Oh, there is one confusion. That's in RD. Hold on. Well, the occupancy rate's still the same. 17.5%. Okay. That's and look, professionally managed. So that means they're probably paying 25 to 30% on this. All right. So now I got to change something before we go any further. I got to change this to USD. All right. Let me here it is. Currency up top, USD. All right. Now, um I don't think we're going to be able to get pool view ocean view from here. I don't see how. Unless these one of these two over here has ocean view. And maybe it does because this thing up here has 40%. See what we got. We see a 40%. There we go. Okay, here we go, ladies and gentlemen. New apartment, pool view. Oh no, it's 4%. That's only 4%. They're charging 148 a night. No, wait, 42% final performance. Last year, I don't know what the year is, but 42%. But their revenue, look at this, 1900. But that's because they're at 148 a night and once again, 2-bedroom, 2 baths. Just so you guys know. Okay, in fact, check this out. So this is what uh post retirement travel and everybody else, you can easily see what's happening. Pool view, $148. I don't know what unit this is because it looks like the same Aqua Pearl. They have Cana Pearl there. They have Aqua Pearl. They have a bunch and not just Cana Rocks. So this is what I'm referring to. They're adding more units this year in there, but it's inside. All right. Now, the other thing about the Galaxy is it's supposed to have its own restaurant there, supposed to have a fitness center, and maybe even like a hair salon or something. Underground parking and things like that. But this is 2 bedroom, 2 baths, 148 a night, and again, it's 40% occupancy, and they're not going to clear much. All I can say, because we're talking about, I don't even know what this is, 1917. That doesn't even make sense. I'm going to do something real quick. 365 times 42% equals 153 times, yeah, that's not right. That's 19,000 maybe. 153 times 148, is that the average? Yeah, that's the average. 22,688 is what that comes to. Yeah, that didn't seem right at all for 42%, because that's near 50%, which is our goal. Now, here's the question. We don't know what they bought the Aqua Pearl unit for. It could have been a 2 bedroom if it was back in the 2019. It could have been 130, because 1 bedrooms were like 80,000, 85,000, 88,000. It could have been 117, because at Conner Rock they were selling a 2 bedroom for 117 in 2021. So we don't know what they were charging, but I have a sneaky suspicion it wasn't 148,000 if they got it way back when it first came out. So just saying, but it could have been because it's closer to the water. But anyhow, let's move on. Let's see if we can find so. Oh, we have another one that popped up. Let's see if we can find something. There's a third one here. Let's see if we can find one with ocean view. This is on the water. Private beach, 47.7. I don't know where this is, but private beach. Look at this. Oh, look, 151. He's only $3 more as the average daily rate. Okay, here we go. 25,600, ladies and gentlemen. But I would have to say, I know for a fact there's no way it was 250,000. Even 5 years ago or 4 years ago. There's no way. That's right on the water. It's on the beach. There's no way this was 250 grand. So we don't know, but he's getting 47.7% occupancy. Again, this has nothing to do with the Conner Rock labels. Oops, wait, hold on. Am I even in the Conner Rock? Yeah, I think I am. Yeah, there's a golf course. Okay. All right, just to be clear, let me go check here real quick. Yeah, this is Conner Rock, just to make sure I was in the right place. Yeah, here's Conner Rock, and look at this big difference out back. Golf course view, $68 a night, 2 bedroom, 17% occupancy, and we know the least they could have spent was 117 grand. That's the least they could have spent, plus their furniture. So now you're understanding $68 a night. That is not even a good thing. And 17% occupancy. Let's go with another one. No ocean view, no nothing, but they're going to have golf course view. Let's go look. It's called the Palms. I don't know where that is. What's that? What happened? Okay, that's not right. Let's go to another one. That looks like it's still in there. I guess it could be. I don't know. Anyhow, 21% occupancy, 104 a night, 2 bedroom, 2 baths. So this is what the problem's going to be for post-retirement travel. Because you see all these 2 bedroom, 2 baths, and they're all like 109 a night, 11.2% occupancy. So when you turn around and say, well, I have ocean view, private jacuzzi, new condo, private beach, 11% occupancy. You can see all these are like under 20% except for the one up close. So you see closer to the beach matters. 20% occupancy for the beautiful pool closer to the beach. And these are still 39% near beach. Fine. But again, I don't see how you're gonna be able to charge 200 per night. Let's say 250 a night. Um it's gonna be kind of dicey because these guys are 105, that's even closer. So it's gonna be very interesting. All right. Let me know what you guys think. Let me make sure I'm in the right spot though, too. Am I in the right spot? I should have seen. Yeah, that's the right spot. Yep. Let's see. Yep. And then of course there's some people that love El Cordacito, right? I don't blame you. It used to be, 70% roughly on average for occupancy rates, but now even they have added hundreds of units in their neighborhoods, which is going to affect the occupancy rate. And because these other resorts are starting to make something, build theirs and come online, it's siphoning off people coming to that area. So look at all these right now. Six. Look, this is crazy. I'm not even going to open this up too much. Hold on. Look at this. 9.9, 3-bedroom, ocean view. Look at this. 9.9. Occupancy, 267. There's a reason that's going to be a problem. Because once you start realizing the numbers all the way around and it takes less than 5 minutes to walk to the beach, look at this. 104. Has an ocean view and a pool, 12% occupancy. They can't compete because there's too many units. Look at this. We'll just keep going. 193, 3-bedroom, 3-bath, sunbeds, 47% occupancy. Or is that 40? That says 4.7. 4.7%. So you could see 6.6% 4-bedroom. Beachside condo, 135 a night. See, oceanfront Palomar, 41% occupancy because he's only charging 123 a night. But he didn't buy this for 123,000. It's oceanfront. There's no way. We know that it had to have cost over 260 in 2008. So even if you would have bought it back then, the 2 bedrooms across the street from the beach was 260. So if it's on the water, it had to have been 260 and up. And he's only getting 41% occupancy at 123. So he's only doing around 200 and less than 280 nights. And he's only getting 17 grand. That's well below after taxes or after fees or whatever. He's not even making the 10%. Well below. It's near 5%. So not going to work. And this is all that's going to happen. They're adding more units over here. I can't see that one. I was going out showing Mo the stuff out by the water because there's a misconception. When you have low occupancy, this is what happens. You have stuff by the water and you go, okay, this is oceanfront, 21%. This is in El Cordacito. This is on the water. And so this affects everywhere along the coast because people just do what I did. And they're like, I can stay on the water for 130 a night. Great. I can stay on the water for 140. I can stay on the water for 120. So that's where things start getting crazy because they're going to say, well, I can stay here versus staying down here because there's opportunities. So again, that's why it matters about the occupancy rate. We need it to be higher in order for everybody to be good. Everybody's occupancy rate would be like double. So if it's 12, it would probably be 26 to 30. If it's 40, it might be the 50, probably the 60 to 70, things like that. If you can get your tourism numbers up there. All right. If anybody has anything else they want to discuss, do so now. I'm going to wrap this up here shortly. And oh, by the way, I should have said something, because right like this right here, look at this. Post-retirement travel. Thank you so much for being a member of the channel. I greatly appreciate it. Thank you. All right. Okay, ladies and gentlemen, I hope I helped you out. Now, let's get to the other thing, because it's already an hour and 58 minutes. I didn't even want to be on this long. So, Brian P., Mr. Dividend, has arrived. Welcome to the SSN Nation Financial Friday Night Live Stream. All right, he brings his tagline. Happy day, Eric. I hope all is well with you and your family. Yes, it is. Hope it's all well with you and your family. Happy day, SSN family. Smash that like button. Thank you so much for mentioning it. I greatly appreciate that. All right, Mo Better. He's in the house. Just a discussion we had. I had to bring it to the masses. Welcome, Mo Better, to the SSN Nation Financial Friday Night Live Stream. And he brings his tagline, what's up, E? You know, what's up, SSN Nation? We in the building. We've been in the building. He's in the building. Very happy to see you once again. We're talking about what we talked about. I had to let other people know what we're doing, even though I let them know last week. But this one was more definitive. And now we can see the numbers. So you guys know where I got this from, the numbers for occupancy. You guys can go see for yourself. So you don't have to be in the dark. Air ROI, I did not, all the stuff I'm using is just free. I did not pay to sign in. This is what you can do without having to pay. You can just go see what occupancy rates based on their Airbnb profile. You can see the occupancy rates. That's all you care about. You kind of care about the money, but it's you look at the money, but you also need to look at the occupancy rate. So if you see something where it says, oh, it's 143 and the occupancy is 40%, okay, we can live with around about that number, because you don't know if somebody booked for a week and they might have got $100 off, or it's just what the average is for the end result. So we don't really know what it was, and we don't know what time of year it was rented, right? We just know the occupancy rate is a certain number, and this is their average amount. All right, estimated roughly. But that's helps you better than zero. All right. Zero does you no good, because now you would not have, see, in other words, what would have happened is, if people were investors and they knew where to go and look, there's no way they would buy a unit for $450,000 in the same building that post-retirement travel bought for half of that, because they can't compete on the prices. So basically, they just got it, and I guess they're just going to hold on to it and visit it whenever they want and pay the HOAs and be happy with it. But from an investor standpoint, that makes no sense, because we know we can't charge $400 a night in Conorock. That's crazy. You guys can easily see that is not even a thing. Nobody's getting anywhere near that. Even the guys on the water don't get that. So there's no way. And the reason they don't get that is because it's very basic. You don't get Hard Rock amenities. That's why. So once they nixed that portion of the deal, which was never a deal, the realtors said it was, but it never was. So now we got to pay $100 per person, more than that, if we want to go use the Hard Rock facilities per person per day. And all of a sudden that starts getting pricey, because you're normally going to have 3 or 4 people with you. So $450 a day, that's kind of rough. I mean, some people will do it. They might do it one time, but they're not going to be doing it 3 or 4 times and pay $250, $300 a night. No, not going to happen. So anyhow, that's how we do it. How accurate is that Air ROI platform? It's going based off of the actual Airbnb rentals. So it's within a margin of error, but it's not like 30, 40% off. It's more like single digits, like 5% either direction. It's not like it's way off. They're basing it on what the rental rate is for the actual Airbnb unit, the nights that's booked, and that's how you can go look at each Airbnb and see how many nights were rented. So you can figure that out. The only thing you can't figure out is the actual number. All you can go by is this is how much they charge for the weekend. This is how much they charge for the weekdays. So that number for the rental amount, that's why I say it can be 10% in either direction, in my opinion. That's just my opinion because there's no that people give discounts, which I don't, but people give discounts for a weekly rent, which makes no sense. But that's to me, but that's what people do. They say, okay, you're renting it for a week, we'll take off $150. One night free, or let's call it. So that reduces their revenue. But on their calendar, it'll show that they should have gotten X amount of dollars. That 150 runs into the whole full week. So that's going to be added on there. So then it gives an average price of 150, right? But then if some people do like 4 nights and they do midweek and midweek is, I don't know, 125, now all of a sudden the average is pretty accurate, right? So that's how it works. It's there's got to be a give or take of about 5 to 10%. So it's accurate. It's damn near it. Basically, you can go to anybody's Airbnb and you can go look at their calendar when you get ready to put a date in. You can see what dates are booked. So you can actually get it. So they have a software that can actually track everybody's book dates in real time. That's how they can do the occupancy rate. All right. Just remember, all calendars are not all. A lot of calendars are iCal. So what this means is you can be on different platforms, and if I have your iCal number, I can actually hook into your calendar so I know when it's booked, or I can actually find out your real occupancy numbers. But again, I won't know your nightly rental number. I only have that because you listed your nightly rental rates. But again, oftentimes people have those 5 nights. You book over 5 nights, I give you 10% or 5% discounts, all kind of crazies. So that's what you don't know. But you can get it down to 40% occupancy. Means we did 280. Was it 280 nights? But we don't still know how many weekend nights versus midweeks. We don't know if there's any specials. We don't know. But again, they're within that 5 to 10%, and that's all you need. But we do know what our numbers are. My number, your number should be 0.1% of whatever you buy it for is what you need to rent it for, because that gets you a double digits at under 50%. You can do like four, you can do the two. Let me do it this way. I'll use this as a perfect example since we already did it. So when we were doing the 40%, or was it? Yeah, it was 40%, right? Was that the post retirement travel? But even if it wasn't, it was those 280 nights, right? And you do times, no, if that's more than 40%. But anyhow, whatever, I can't remember why we got 280, but we'll do 280 nights. Isn't that like 60%? But anyhow, I don't remember what the number is. But let's do 280. And then if we did $210, look at what happens. It's 58,800. But now I don't remember what the 280 was. So 280 divided by 365. Oh, that was that 76.7%. That's way too high. So we'll do what I always do. We'll go 365 times 50%, because that's all we really want. 182.5 times 210. Now that's 38 G's. So even if I have a management company, I do times point, even at, 70, 20, yes, 25%. I'm down to 28. I still bought it for 210. So I'm still above 10%. So then you go, okay, HOAs are 350. So I go 4 G's minus 4,000. Starts getting close. Now I'm at 24,743. Okay, let's call it I did 50%, but if I can do 2 weeks of rental, then I have enough that the renter paid for the Wi-Fi. But let's just say, let's just take off 500 for the Wi-Fi for the year. So yeah, we're down to 24,243. So we're still in our over 10%. We need another $2,200 worth of expenses, which could come in the form of different things. It could be insurances if needed, which I don't know why you would, but if you needed that, that's a thing. I don't know how much that would be, but at least you have a chance to be at 50%. And if the unthinkable happens, where all of a sudden you're doing 10% more, now you're going to be at 12 to 13%. And then you're off to the races. But again, if the tourism numbers don't rise, you're not going to be able to keep sustaining, adding to your rental number. So that's where we're at. So hopefully everybody understands. That's why I always go 0.1. So then I go 50%. And if you're in a high tourism area, 50% is realistic. It's not that hard. DR is not, it is a high tourist area, yes, but it's not a high enough tourist area for the amount of Airbnbs and hotel units that they keep adding every year. In other words, there need to be they need to stop, but they can't because they've already committed. But if they actually put a moratorium and stopped to let the tourism numbers catch up, so where the hotels are at like 85% annually, and now Airbnbs would also rise to 60, 70, some would be 90%, some would be 75, but at least everybody would rise up, because then you would actually catch up with the tourism numbers and available units. Again, I don't want to tell these dudes how to do their jobs, but hell, stop the comfort tour would be one. Make those guys pay their taxes for the imports of their products and machinery and stuff. And why would you foot the bill for that? Pressuring your taxpayers. That's ridiculous. And you're still not building because you're not collecting tax money. You're not building the infrastructure, which is my pet peeve. So anyhow, that's it. Okay, ladies and gentlemen, let's get down to the other things at hand. All right, because I've been talking way, way too long. The private credit meltdown is coming. Here it is. Actually, it's already here. What am I saying? It's coming. You guys, here's CNBC. By the way, here it is. See what it says. Private credit has surged in popularity since post-financial crisis regulations. Fine. JP Morgan Chase, Jamie Dimon warned after a pair, here it is, of private credit-backed companies declared bankruptcy that problems in credit are rarely isolated. That's correct, because we have derivatives. You guys know I've told you about derivatives before. That's how this goes down, because now somebody said, I want a loan. And I don't even want to use houses really. But I'm BlackRock. I'm taking in your money for investments, putting the money towards the investments. Now, all of a sudden, I say, well, I have 1 trillion assets under management for this company, these private equity companies. And guess what? We bought $2 billion worth of their stock, or we invested $2 billion into this company. They filed bankruptcy, but we borrowed because we have assets under management against our assets under management, and part of our portfolio is now no longer good, but we still owe the loan that we borrowed from, even though this company's in bankruptcy, and they're not going to send us any revenue. Do you see what's going to happen? That's a problem. And now there's a chain. Depending on how far it goes down, now some more people won't be collecting money. BlackRock, no problem. They have trillion under management. But what happens to the other company that's worth only about $5 billion down the line? And they're not getting their, let's say, $500,000 or 1 billion. Now all of a sudden there's a problem. So that's why Jamie Dimon, very smart guy, he's been running JP Morgan, like one hell of a great job, I have to admit. He's right on it. He says exactly what it is. He's not lying. Companies that are most linked to asset class, such as Blue Owl Capital, as well as alternative assets gains giants Blackstone and KKR, are trading well below their recent highs. You understand, Black Owl Capital is another credit scenario. The sudden collapse last fall, a string of American companies backed by private credit is the thrust fast growing and opaque corner Wall Street lending into the spotlight. You know what else has happened? This is why gold, silver, precious metals is rising. There's a correlation. $100 today for silver, ladies and gentlemen. Those 10 ounces from 2019 for $135 is now where you can go to a coin dealer broker and take away about 3% or 2%, and you get $98, but nonetheless, you're going to be around $950 for those same 10 ounces. That's how fast and far inflation has come. It ain't no 2%. I told you guys this before. It's more than 15 to 20%. They lie to you. And that's the point of gold and silver. It stays up with inflation. So whatever I could buy 5 years ago, yes, it's the same thing I can buy now, but now it's cost $950 to $1,000 more. That's how fast and how far inflation has went. 25, 20, that's 20% basically. And the reason why is because they're printing more money. I've talked about this before. This is not rocket science. This is economics. You keep adding money to the money supply, you got problems. All right. So that's pretty much the gist of it. The rise of private credit is lightly regulated, less transparent, opaque, and it's growing really fast. You see a problem yet, ladies and gentlemen? This is what we already knew. This is basically what I kept telling you about derivatives over the years. They just keep doing it. They don't care because they're the ones making the money. You're the one that's going to feel it when it all collapses because they're going to grab your money, your assets. They're going to pressure you to give them your stuff that you may have a loan on, or you may actually have property with the loan on. And they say, well, that property's worth X. We'll say, pay us. And then when you can't pay us, they take it back. All kind of tricks that these guys are going to use. And you can see where this is going. This is not good. This is not good. So look at this one line here, this paragraph. Private credit boosters such as Apollo, co-founder Mark Rowan, have said that the rise of private credit has fueled American economic growth by filling the gap left by banks, served investors with good returns, and made the broader financial system more resilient. If you guys don't know nothing about Apollo, I don't like those guys. I'm just going to tell you right now. These guys, they literally are corporate raiders. What they do is they find profitable corporations and then they raid it and they extract assets. And so then they move on after they sell off the assets. Not good guys at all. But they make a lot of money because they have a lot of capital to spend. All right, just so you guys understand. And that's what they started doing, is started trying to fill in these gaps left by the banks. What's going to end up happening is those big gaps can't be repaid. So they're going to put themselves in jeopardy. Just so you understand. Now, big investors, including pensions and insurance companies with long-term liabilities, are seen as better sources of capital for multi-year corporate loans than banks funded by short-term deposits, which can be flighty. private credit operators told CNBC. All right. So again, this is another crack in our system that has always been there. But the pressure right now, due to everything that's happening around the world, now there's no like little leeway. You can't go to EU. You can't go up in Canada. You can't go somewhere else in Asia and say, hey, we're going to make this side deal, because now everybody's like, hold on, we're not friends like that anymore. You're trying to make sure we don't get paid in Venezuela for the infrastructure we built for them guys and extract the oil. Hold on, you did an embargo and messed up our ships over there, trying to secure those ships for what? So all this stuff comes back to haunt what's going to happen. So you're not going to be able to say, hey, EU, can you give us X amount of dollars? They're going to be like, no, we're worrying about ourselves right now because you guys are out here acting rogue. All this stuff is why gold, silver, precious metals rise. Stock market's rising because what else is there? If you're not buying gold, silver, precious metals, and you're not buying the stock market because it's going to reach all-time record highs, then where else are you going to make the money? That's the kicker, right? For ordinary investors. So they go, well, the Magnificent Seven, US top 30, S&P 500, NASDAQ, they're all rising. I might as well put more money in there. That's what people's all options are. So once those options are depleted, now what's going to happen? You need the Federal Reserve and friends to buy more securities in order to prop up the prices. And now they're going to be printing more money, except now there's no credit facilities, so they can't borrow. They're not doing margins. They're going to have to actually use their money. And now all of a sudden they're going to be at risk for margin calls and everything else. And that's how we have a downward spiral. So you still got 11 months. December 31st, 775 credit score. Real estate outside of America or business. Bank account outside of America or business. Okay? That's what you got to do. All right. I'm going to wrap this up, ladies and gentlemen. I've been on here for almost 2 hours and 20 minutes. And the first 10 minutes, it was on mute. So I want to thank everybody for watching the first 10 minutes. Some of you may be going, what does he mean by that? Actually, because after in post-production, I can actually wipe clear the first 10 minutes. But I want to let you guys know I love you guys very much. I appreciate your support over all these years. The least I can do is give you guys some direction for the Dominican Republic and let you know if you feel you bought for too much, don't worry. Don't worry. All of you who bought between 2018 and 2023, you're going to be fine. Everybody who bought after that, at the new prices, you may not be fine. But all of you who did not buy anything at DR, guess what's going to happen? In my opinion, is prices of new delivered properties that were not purchased in pre-construction or were, people are going to go, well, I can't make money on long term. I can't make money on short term. So I'm going to sell it. And they're going to sell it either at the same price that they paid for it or below. And right now, there's people at River Island selling below their purchase price because they want out. Yes, that's the Atlanta, River Island that's not delivered yet. They already see the writing and the numbers on the wall because they paid $159 for a studio unit that overlooks the parking lot. That was for starters. Then it escalated to like $179, $189, and then into the 200s for 1 bedrooms and 2 bedrooms in the upper 2s into the low 3s. And now all of a sudden, you can already figure out there is no way you're charging $200 and something per night, not anywhere near the beach, and at this cool project, but it may be a problem because you're oversupply. And so they're like, hold on, let me get out of this thing. So anybody that wants to take over this payment, I'll sell for less than what I even have paid, because they had to pay 80%. And remember, it's late. So they've already paid 80%. It's a Noval property. So therefore, they're just looking for, okay, I'll take, instead of that 80% number, just give me 75%, and you pay the remaining amount, that 20%, because they don't want to even, it's worth it to have that money as the gold, silver, and precious metals are going up, and stock market keeps going up. It would have been better if they actually had the money for that, even just half of that, and it would have already doubled in the same time frame, or actually twice doubled, quite frankly. So they had opportunities that they missed out on, and why risk anything else? So that's why there's a lot of reasons people are saying forget that, because they know the numbers now, and now even more people's going to know the numbers. But again, not everybody can get out. Not everybody does internals. And so now there's going to be deliveries where people are going to say, okay, I put in my 50% or 40%. I don't want it because it's not worth what I said I was going to buy it for, and it's not going to appraise for what I said I was going to buy it for. So now that puts them in a problem with oversupply. And we're going to have an oversupply for the next, the way I see it, 2 or 3 years. If anybody has any recommendations on how these guys are going to get more tourists to the island versus just random 300, 400,000 more just because, let me know. Because islands are the hardest thing to just add more passengers, tourists, because you have to advertise a lot to get more tourists, which is a cost of acquisition. So that's what we're talking about here. And tourism will not cut it. They need some other service. In the movie business, no, that's not a thing. You can't even get on studio lots. So the only people that's there is going to be people that are hired, and you're not hiring tens of thousands of people just for a day or a week or 3 months or 4 months. That's it. So it's not like it's a long-term job, right? So what if Alex Rodriguez says, I want to build $1 billion, whatever, nice place for all the rich guys. So what? They don't even live there. How's that going to help the economy? They're going to live there during the best time of year, maybe January, February, March, December. So what? The rest of the time, rent it out, or occasionally at some, crazy rate, 15,000 a month or week or whatever, and hardly anybody's going to use it because that's not even a thing, right? So where are you going to get this industry? And you can't use a data center that sucks up a precious fresh water, and it makes it toxic, and your electric grid's not good enough, so that's not going to work. And again, not enough jobs after it's built. There's only going to be less than 50 jobs. It'll take 2,000 people to build it, but less than 50 jobs after it's built. That's not going to work. Manufacturing. So you want to be a manufacturing hub? Okay. Again, your electric grid is going to come into play, and water, sewer, and garbage is going to come into play. You can't rock with all this nonsense. You have to move up to 1980s, at least. Can't stay in the 1950s and 60s forever. You got to move into the 1980s and get your sewer systems proper, water systems proper, toxic water system cleaned up. I mean, you can't keep rocking with your water smelly, messed up, toxic. Your rice fields, toxic. It's not good. How do you go from there? Okay, enough about that. But once again, thank you so much. If you guys have any questions, the chat room's always open. Comment section's always open. If you want to see the live chat and get some links, because again, I said findhelp.org for everybody out there. Also, if you need help with loans, then you guys know you got to see Tracy. All right. Here, let me see if this is good enough. In the chat room, did that do it? Yeah. Here's her email. All right. For everybody on podcast, Tracy, TRACY, .sharpe with an E at the end, SHARPE at moneyladder.com. All right. So I put in the chat room. That's in the chat room, so you can go check it out. I also put the YouTube video where she came almost 2 years ago, and she talked about when she worked with another company, what it was like and how it operates. It'll take you 1.5 to 2 years, but at least your credit will be in good standing and recorded that way on your credit file. So your credit file can improve dramatically. So you don't have to file bankruptcy. You don't have to allow your debit or your credit to go down to debt collections and all that. Just call her up. All right. It's that simple. And then she'll tell you which direction to go. Again, doesn't cost anything to email. Sorry, not call. You got to email her. Let her know you're from SSN Nation. Eric sent you and all that. Okay. She's family, so it doesn't matter. All you have to really do is say SSN Nation. Don't matter. All right. So just keep that in mind. Okay. There's one last thing I'm missing, and that is the Bancus credit card. Not credit card. Forget the credit part. The Bancus MasterCard debit card. Remember, I need that banking account. Your crypto accounts. You use crypto. What are you doing in a regulated environment? You send your crypto back through that regulated exchange, central exchange. Do not keep your crypto on a central exchange. They're just like a bank. They're holding assets under management. All right. They tell you when you can withdraw and upload and move money around. Right. So, and they can track you, your government. All right. So now with the Bancus card, that's everybody that is unbanked. You can have a Bancus card. You can have people send you money, and you can send your crypto to it. All right. Which is outside the United States jurisdiction. It is Mexico company, Mexico City headquartered. Okay. In Mexico. So again, that meets the criteria outside banking, outside the USA jurisdiction. Again, that is something I consider greatly as a safe point. So there's nobody that can, the USA can't come in and say, hey, there, oh, it looks like there's I don't have this, but hey, there's $500,000 in crypto sitting here. We can grab it because it's on the central exchange, regulated. So that's why you need it off a central exchange. You need it in your own wallet, or you need it someplace outside the USA jurisdiction. A MasterCard is good because you can always swipe it or just park it. But you can always send other people money. Whoever has another Bancus card, there's zero fees to send another person with the Bancus card. And all you need is their email address. No cost. So this works great for people that need to send money overseas. Now, the only downfall, we always have to talk about downfalls, is when you have crypto and you send it to your Bancus card, they charge you 4%, which I do not like, but it is a necessary evil because there is a make money component. They give people like 1% of the upload, and then 3% is how the company gets paid. So it's that simple. So if you can rock with that, you're good. But again, the advantages to me outweighs the possibilities down the line, because with the private credit defaulting, the Federal Reserve having to do overnight repos, meaning they have to give liquidity to the banks so they can actually pay people the following day. That is crazy already. It's happening right now. So that's why should be very cognizant about how much money you decide to leave in a banking facility. All right. Or any facilities that has the United States, which is a broke country, where they can grab your money, okay, or grab your assets for that matter, your safe deposit box. All right, social media, you can always look it up. They've grabbed people's stuff, and they're not criminals. Just saying, you don't have to be a criminal for them to grab your stuff. It just doesn't happen to enough people, but it happens to enough people where it's going to be on social media. You can just probably look on Google or something, TikTok. There'll be people saying it. I don't even have to look. I already know because it already happened. Like I told you guys many times to me a long time ago when there was no social media and people didn't believe me. They're like, "Oh, you must have did something wrong. No, you must misunderstand." I was like, my money's gone. What is there to misunderstand? Like, what are you talking about? I'm not in jail, so it ain't a criminal activity situation. They just literally stole my money. They're like, no, banks don't do that. I'm like, oh, Jesus. So now that we live in the social media age, people are effed around and find out. So again, that's why that's the reason I have a different point of view. And like I've told people before, that's why people in the 1930s and 40s would have a different point of view. If they're still alive, they won't trust banks either after the bank holiday. All right. So anyhow, we don't have story night, but I forgot. I showed this before. The Invicta watches, ladies and gentlemen, they used to make outstanding Invicta Reserve watches with Swiss movements. This is one of them. That's right. Called the Hyperion. The orange actually glows in the dark. Is that crazy or what? And the dial also. It's a chronograph. All right. So that's why the hand does not move, the second hand that is, but the rest of the hand always moves. So you got a chronograph for, distance, time. Oh, calendar as well. So this is what is this, 8040 yen? I think so. Oh no, this is a different one because it has a date on it. So that means I don't even remember the movement on this one. Hold on a second. Is this a 5030C? Let's go C. Is that, let's see. Or D. Let's go. D movement. Let me see what that is. Yeah, we got date, the day of the week, the date. Um, yeah, I think it is a 5030D. It's not an 8040 because 8040 would be different because it doesn't have the date on it in this location. It actually clicks over to some dates. So this one's a little different. So it might be a fit. You know what? Hold on a second. Let me go look. Uh, Hyperion. Let's go. Let's see what this is. Now I gotta go look it up because I like to try to remember. I couldn't remember. Come on. Okay, it is 37333 is my model number. I'm looking at the 37336, which is whenever possible. 50. I couldn't find it. I thought it was 5030. It's a 5050C. And behind, you can't see it really, but behind it's 9 o'clock, straight up and down. Behind the 9 o'clock, 12 o'clock hand, you look down towards the middle, you'll see it starts Tuesday. I never change that because I don't wear these every day. But again, chronograph, Victor Reserve, one of the sweet ones, 53 millimeter stainless steel, 200 meters water resistance. All right. So I have some collections of this. It's not a Rolex or nothing crazy. Those are the ones I like. You always wear what you like. All right. Not trying to impress, but I love these nice big size 53 millimeters, 50 millimeters, 45 minimum, 55s. I even have a 60 that I've never even worn. But one of these days I'll break it out whenever that happens. I don't know. It's in storage, but we'll see. All right, ladies and gentlemen, I'm out of here. Please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. And all I can say is everybody that bought between 2018 and 2023, congratulations. Regardless of the numbers, you will still be fine because you will be able to charge. You can charge 89 per night. You can charge 99 per night. You can charge 120 per night, even 130 because 2 bedrooms are 130. So most of the time in those areas, they would have had plenty of amenities and a lot of other things going for it other than just a pool and a fitness room. So that will give you an advantage because there's no way the new guys who paid 220, 250, 270 for 2 bedrooms can compete with you. So they're out of the market. Otherwise, they're going to be out of business because they're going to have to charge half of that number to compete with you. So you earn 10%, they earn 2%. It's not a good number for them. So eventually they'll say, well, let's do monthly rentals, or they'll figure out something or sell it. But if they sell it, it's going to even be higher, right? So again, the person can't compete with you. That's fine. So you only have an upside because all they have to do is have more tourists. And then all of a sudden, you have more rentals and the price will rise for your rent number. So that works out in your best interest. All right. Hopefully that explains everything. If there's anything else you guys want to know, you know where to find me. Support at stopstrugglingnow.com, or in the comments section, you can make a comment, and usually same day. But lately I've been doing it in 48 hours, checking the comment sections. So again, I'll see you on Monday. I hope. Have a great weekend. Stay safe out there. And with all things considered equal, make sure you stay safe. Don't cause any problems. Stay level headed. A lot of people under stress. You aren't going to try to be one of them, I hope. And with all that said, make sure you keep your head up. Keep moving. And I'm out.